Traders, we have the Senior VP Portfolio Manager at Kingsview Asset Management with us this morning, Mr. Paul Nolte. Good morning to you, sir. Thanks for coming on. Paul, I want to talk about the pound, peso, Swiss, and the yen because they've all been on the move this week. But first, let's talk British pound. A lot of focus on Trump's visit to the UK. Paul, Trump weighed in on Brexit, and I think the longs wish he hadn't. Talk to us about what we're seeing in terms of that weakness coming back into play in the pound this week. Is it related to the visit, or was it related to the wave of resignations from the top officials we saw earlier this week?
Yes, yes, and yes. The British pound has been really under pressure for a long time, and it's all revolving around Brexit, and Trump threw a little bit of kerosene onto the fire. So you've got a very weak currency. It's been struggling for the last 2 or 3 years to make headway. It was selling at $2. Now we're down to 130, 140-ish, 120, and it does not look like it's going to be getting out of the way anytime soon and heading much lower, I think. The flip side of that is really the dollar. We're back to king dollar, and long live the king. And that's really been the currency of choice for a lot of traders across the globe. And as a result of it, no matter which currency you're talking about, you're seeing that weakness being expressed in the euro, in the pound, etc. Each of them having some of their own issues on top of it. But it really is, I think, much more of a dollar story than it is anything else. Brexit is a big issue with the British pound, and will likely to continue to be weaker going forward.
Yeah, that's a good point, Paul. We did see that dollar back to 95 today. Now let's talk peso, because we saw them run the peso up into the elections and then really have yet to look back for the most part, considering the aggressive nature that the U.S. has been exhibiting in the U.S.-China negotiations. What's lifting the peso? Where's that optimism coming from?
They've been talking about, redoing NAFTA, and there's been the discussions going on behind the scenes. Some of the stances have softened a little bit, so we're seeing a little bit more strength in Mexico. And I think, too, when you start taking a look at some of the trade pictures and where trade is going to ultimately go as a result of the tariffs, you may see actual buying coming into some of the foreign markets as opposed to the U.S. markets. And Mexico, I think, is one of the bigger beneficiaries, one of the larger markets in North America outside the U.S. That will provide a lot of the trade that the U.S. is putting tariffs on.
Paul, let's talk a little bit about our neighbor to the north. We had Bank of Canada this week with a rate hike. Some would say a sign of optimism there. Now, I'm wondering, they've still got some trade issues as well, much like Mexican peso or Mexico. Clearly, though, that's not the only concern. I mean, they're either trying to raise to normalize so they can have some ammo should things turn south, or they have some real legitimate concerns that the economy is heating up and they need to get ahead of it. Either scenario, though, somewhat bullish in the short term. Would you agree?
Oh, absolutely. And to the other backdrop to that, outside of this week, has been the trading in the energy complex. The energy market generally fairly strong. The loonie tends to follow the energy markets as well. Their real estate markets in general have been very hot. They've come off the boil here a little bit. So I think the raising of interest rates, again, trying to cool things down a little bit. But keep an eye on the energy market for a little bit of direction on where the loonie winds up going.
All right, I want to talk a little bit about the yen, because it's one of the places where we actually have seen some pretty consistently reliable flight to quality as the indices were under pressure related to trade concerns. But Paul, my question is to you, do you think that the sell-off that we saw yesterday is that flight to quality type price activity kind of unwinding as the NASDAQ posts new all-time highs, or do you think that had more to do with the fact that we broke that key trend line? I mean, that trend line goes all the way back to like mid-2015.
Yeah, and I think over the short term, I think you're exactly right. Traders are looking certainly at some of those long-term trends. I think really when you're taking a look at the yen, you're looking at it as a defensive play. So when you get the risk-off trades in the U.S. markets, the yen tends to do well. We've been in a bullish phase now for the last 2 to 3 weeks. I think the yen will be weakening into that, and as long as the U.S. market holds up here, I think the yen can continue to be a little bit on the weak side, pushed further by breaking of that trend line that you discussed earlier.
All right, Paul, real quick, I'm not sure how much you're dialed in on the Swiss. I realize probably not the most commonly traded currency, but If you're prepared to do so, can you comment a little bit on the weakness that we've been seeing there and why you think they're nearing the 2018 lows?
Yeah, unfortunately, I can't do much with the Swiss other than my daughter's over there spending some money, so I think it's going to help out the Swiss a little bit, but it's not one of the currencies that we really follow that closely.
Yeah, again, probably not the most closely followed, I agree, but certainly you'd say that it has to do with some of the strength in the dollar, I would think. But let's talk a little bit about the trade war and potential impact to the economy from a growth and demand standpoint. But does the trade war have potential to disrupt the currency markets as well, Paul?
Oh, it absolutely does, and I think you're seeing it expressed really in the dollar. The dollar has been very strong for the last 6 to 8 weeks or so. And what's interesting is if you take a look at the dollar and go back over 10, 15 years or so, this 95 area is pretty important. We got up to, on the dollar index, 100, 105, down to 90, back up to 95, and that was actually support going back 10, 15 years or so. We're back up to that level. If we can continue going forward, in which we may do because we're talking about higher interest rates, our economy is picking up steam here, so there's a lot of support for the dollar. We could see the dollar get back up to maybe that 100 level over the next couple months or so. And it's been that kind of a move. I mean, you know, we're very surprised to see it go from 90 to 95 as quickly as it did. We may see it go all the way up to 100 over the next 3 to 4 months or so. Not in a straight line.
Understood.
But that's why I said the 95 area here is pretty critical.